Good afternoon, ladies and gentlemen. First of all, I would like to express my apologies for not being able to join you all in person today for the Afore FinTech and Regulation Conference 2025 in Brussels, owing to other work-related commitments. Nevertheless, it is both an honor and pleasure for me to have been asked to set the stage for what promises to be an insightful panel discussion on a topic that is at the forefront of financial innovation and one which is subject to much debate: the digital euro and stable coins. At the heart of our discussion today lies a fundamental question: are the digital euro and stable coins destined to be competitors, or can they coexist alongside one another? To address this question, we must first understand the unique characteristics and potential benefits and limitations of both forms of digital money. The digital euro aims to provide a secure, efficient, and universally accessible form of digital money. It seeks to enhance the resilience of the financial system, ensure monetary sovereignty, improve efficiency in our current highly fragmented payments landscape, and offer a public alternative to private payment instruments. By leveraging the trust and stability associated with central bank money, the digital euro has the potential to become a cornerstone of Europe's future digital financial ecosystem. And needless to say, achieving these ambitious goals is not a simple task and inevitably involves accepting certain trade-offs along the way. Stablecoins, for their part, have gained substantial traction in recent years with their claims to offer faster, cheaper, and more inclusive financial transactions, particularly in the areas of global cross-border payments and their seamless integration into decentralized finance platforms and applications. The question as to whether the digital euro and stablecoins could potentially coexist alongside one another will ultimately very much depend, among other things, on the final design of the digital euro. In any case, the wide-scale adoption and use of stable coins and crypto assets must be carefully monitored and also accompanied by stringent regulatory requirements in order to avoid adverse repercussions on financial stability, particularly from a central bank perspective. This is all the more true for non-EU regulated stablecoins. With the introduction of the MiCA regulation in the summer of last year, the European Union put itself at the forefront of crypto regulation globally. MiCA should serve as a motivation for other global regulators to follow. This, in my opinion, would be a very welcome development, although it is rather likely that our friends across the Atlantic might move in the opposite direction. Today's panel discussion therefore promises to be a thought-provoking exploration of the interplay between stablecoins and the digital euro. Finally, as we navigate this uncharted territory, it is essential to foster collaboration between regulators, policymakers, and industry stakeholders to ensure that the benefits are exploited while mitigating potential risks. I look forward to learning about the insights and perspective that our esteemed panelists will share today, and I wish you all a fruitful and stimulating discussion.
Burkhard. But with that, we've got indeed on the panel here with us Nikos Papandreou, Member of the European Parliament and Shadow Rapporteur on the Digital Euro legislative file, Elie Beyrouthy, chair of EPIF and representative of American Express. And we have William Ulgiati from Amazon, a well-known merchant, if I can say it like that. And William is the general manager for EU and UK payments acceptance. With that, maybe starting with the elected representative, as we always should. We do recognize the role and challenges you face. I'd be interested to hear your reactions to what Burkhard has said. What do you see as the potential of the digital euro?
Yeah, I think to comment on his points and to go back to the discussion that we just finished, that I just heard the ending of from this crypto cybersecurity person whose name
yes, from Chris Lovejoy
about competitiveness. And as our friend from the ECB said, there's a worry that the stablecoin and various other coins will dominate in the future our currencies. And I'm trying to think ahead, like in 2030, I guess that's not too far away. If we had a pie, the pie chart, what would be the currencies in use? It probably would include stable coins and maybe even Bitcoin and other coins. So it's already looking like that. So in that pie, do we need a digital presence, a euro? Yes, we do need it. How will it make sure that the sliver of that euro is not so small? And one way is to make it competitive, which means as opposed to trying to impose MiCA, the rules for crypto assets, on the rest of the world, how about we make our digital coins the ones that people trust in? Because the problem with the stable coins, the confidence is a little bit less than the digital euro. So if we can convince, and this is people in other countries, and not just Europe, for instance, countries, as you know very well, where the salaries have inflation, if the people convert to maybe Bitcoin, Ethereum, whatever else, a stable coin, so they have a guarantee. But it's not a guarantee. If you follow Bitcoin after the tariffs, you see what's happened. There's no guarantee. But there is a guarantee with the ECB. So if we can impose MiCA, I don't like that word impose, but convince the world that the MiCA is the way to go, the digital euro will be such that people will believe in it. And that way we can get the regulation rules, the Brussels effect, as we call it, right? It's not that we have to tell them to do it, it's that the people will want it because they know this is the highest level of trust. So on that, I agree. So the future is like that. Now, the MiCA, as we said before, might be for small companies coming out of the garage, not so easy because of the rules and conditions. And that's the complaint from the other side. And to make another, you hear my American accent, to make a comparison, I guess the way the United States looks at regulation is let's let all flowers bloom, as Mao Zedong once said. In other words, let's let all the stable coins do what they like, Tether, use USDC, let them, and then we'll regulate. And we're saying, let's regulate, and then we see what coins come up. So it's two different attitudes. And in that basis, finally, to get to the main point, as I am shadow rapporteur for S&D, we are in favor of the digital euro, not looking at the technical issues, which I'm sure will be brought up on this side, but the idea that it has to come to Parliament for the ECB to allow a digital euro. It's not so clear that that would have to be the case, but the way the constitution of the ECB is written, they have to get permission from the Parliament. In other countries, they probably don't. China, other countries, they can just do central bank currency. In our case, they have to. So it has to come to us. So on a general sovereignty principle, yes. In terms of the details, we have our friends here to make the complications for us.
Thanks, Nikos. And maybe to you, William, I think as a merchant, you're kind of representing the users, the customers effectively of a potential digital euro. How do you see it? Where do you see the potential of this new form of payments? And given we've got a number of other forms of payments, and instant payments is just being implemented, and we've got different interoperability initiatives between national schemes, and we've got stable coins as well, all kinds of different payment means popping up. What role do you see for the digital euro?
Yeah, my role at Amazon is to enable people to pay on our websites, and by doing so, to trust the checkout, be protected, but also to pay conveniently without as much friction, if we can remove some of it. So this is a bit what we're trying to bring to the table, to your point, trying to offer them as much choice as we can when they pay too. We saw digital euro as a pan-EU payment methods that will be universally accepted with the backup, let's say, of the ECB to Nikos' point. So we were interested in trying to bring some design choices to the table, like how customers transact, how would a merchant accept it, redefining customer journeys if we have to. So when we were selected for the prototype, we thought a lot about these points. Some of the benefits that came, because again, we were agnostic of whether to launch a digital euro or not, right? Our position is more how a customer would transact on it, while leaving the choice to do it or not to the ECB and EU institutions. So we focused on those benefits, and we found a few. Number one for customers is an increased privacy for online payments. But that doesn't come naturally. You need to enable some specific wallets called self-custody, also commonly mentioned as offline use case, but in a more commonly used use case, for instance, including online. You can also look at increased privacy through those wallets when you can unbundle who does the KYC and therefore knows who you are. For instance, you bridge that with the IDAS, and who holds the wallet and therefore knows what you transact on. And those people are not the same. They don't need to know exactly what you spend your money on. So increased privacy if we are enabling those design choices. And the second point that we thought was very interesting is conditional payments, because the technology under which digital euro will be based on enables use cases that enhance payments or value-added payments. We focus, for instance, on one classic use case we know very well, which is an online purchase. And you can imagine a payment that a customer would make online, but the amount will be actually on hold or an escrow functionality, if you want, until the customer is able to verify the item, says, yes, that's the one, I want to keep it, and click on that button. That reassures customers and makes sure they're paying for the right reasons at the right moment. But you can also build further blocks on that. For instance, if the customer decides not to keep that item, ship the item back, and then the amount is again on hold until the merchant says, yes, I've received, and it's the right item. There are billions of concessions and refunds abused right now online, and that would also bring some more trust to the merchants. So value-added services like that, to just take two examples. And for merchant acceptance, very quickly, I think some of the things we identified and discussed largely are things like instant settlement, lower costs because one public infrastructure and central ledger, which means no counterparty risk or interchange between several parties. So those are some of the benefits we've seen in the work done in the prototype over the last few years.
I think, can I just ask a supplementary question, which is, couldn't you get all those functionalities also from a stablecoin, a privately offered product?
You can get those advantages with many other things. I'm sure we can get it with instant payments also. Stablecoins will depend on how they're done, by what party, so there is many other questions. We focused here on the work done in digital euro to say, okay, if you're asking me how to do it, this is the benefits we would see for the payment supply chain. But yeah, that could be done in different other ways or through different other tools, for lack of a better word.
But it brings it back to Nikos' point about trust, ultimate trust. Yeah. I mean, coming to you, Elie, you represent, among other things, the non-bank payment sector, which is specialized in finding gaps in customer demand and finding solutions. How do you see, or how do your members see the digital euro? Is it a threat or an opportunity?
Thank you, Nick. Let me first comment on something that William alluded to, and that's the start of the debate on the digital euro. We were, questioning whether it is needed or not, and that's, I think, we have passed this question. The Parliament might consider this again once they look at the issue. But I say from the EPIF perspective, we wanted, to be very supportive in a way, because we see innovation. We are for innovation. We want, to be part of this new era when we have CBDCs. So we are very supportive of the digital euro as a principle. And in order to do so, we wanted to have a skin in the game and to be able, to offer products on these digital euro rails. And this is something that took us a bit of time, to be able to be sure that we can offer this. I would say there are still certain functionalities that are needed in order for our members to be able, to take full benefit if the digital euro becomes a reality, which we believe it will be. And I'll mention just 2 points on this. The first one is regarding competition, and this is related to the issue of one wallet versus multiple wallets. We know this is something that the European Central Bank has been very vocal on, saying that the project should start with only one wallet per citizen. The European Commission has had a different view, saying that in order to have a better competition, we should have multiple wallets. Let's say that at EPIF, we believe that the Commission is right on this one. We believe we should have multiple wallets for citizens to allow a better competition, and most importantly, to make sure that innovation can take place and that the non-banking sector and the banking sector can offer different products, related to the digital euro, and let the consumers choose. Maybe they want, to be using their Amex digital euro or their PayPal digital euro or a bank digital euro for different use cases. So we shouldn't be limiting the choice of consumers with only one wallet, which doesn't make sense, especially that the ECB has said that technically speaking, it is possible to have multiple wallets under the holding limit. So that's the first point. It's really key for competition. The second point would be related, to pricing. And again, for EPIF, we believe that one thing is to have a digital euro, one thing is to have it, on the market, and another thing is to have consumer adoption. So in order to have consumer adoption, to have, consumers really using the digital euro, you need, to make it interesting for them. And how would that happen? If we as the private sector are able to propose products that make it in a way sexy and interesting for consumers to use. And this could only be done if on the one side, we could have like a pricing that is possible for us to recuperate and get back, what we invest. Taking into consideration, there should be probably a basic service since you have, a mandatory acceptance, so we understand this. But we should have the possibility to innovate and to offer additional services on top of that basic service. So then, we can drive customer adoption and the digital euro could become a success.
Thanks. Before I come back to Nikos, maybe one follow-up question to you, William. Where Elie highlighted some of the, let's say, not barriers, but essentials to make the digital euro a success. What would you as a merchant identify as a key component or barrier that still needs to be removed?
Yeah, a couple of points. One of them I mentioned earlier, the benefits don't come naturally. They come with design choices. So a self-custody wallets option, for instance, is a must. Another one is related to merchant holdings. There is right now no plan to have merchant holdings, meaning that as a merchant, whether you receive 1 cent, €1, or 1 million, you're going to have to transform that each time instantly into fiat currency, which seems like a big waste of resources and creating reconciliation issues downstream. And maybe the last point, I will quote Burkhard Balz from earlier. I think we need a bit more private-public collaborations. Several of these points are in tension. Just to mention one, increased privacy raises questions on how do you respect AML or anti-terrorism regulations. How do we resolve that? How do we make choices is going to be extremely important. And I think we're barely starting. If we are not all at the table, those choices will be compromises, but maybe the wrong ones.
Thank you. I mean, come back to you. I mean, we're talking about the digital euro and we're already making an assumption what it is and what it isn't. But my understanding, many are now saying that we should look at the digital euro in a more holistic way. It's not just a currency to be used for retail transactions, but also should be used for business-to-business transactions, for cross-border transfer to large amounts of money, avoid foreign exchange costs. Or it should be used for programmable applications, as William said, or even for wholesale banking transactions. Where do you stand on that? Because the ECB, of course, has so far been a bit nervous that it might lose control over its monetary policy. But ultimately, you can't just limit the digital euro to a subset of use cases.
I think that's a technical question, as all these are, and I would let, these are all the things we can say wouldn't work, which is there's a lot of negatives, and I realize what they are. Before I get the wholesale, I think it'll have to go there. But mainly this digital act, this digital euro is retail oriented. So it's not bringing it up, and maybe because the ECB is nervous. The ECB is also nervous about the limits. So the multi-wallet has to get that take that into account, like because there's a fear of instability in the monetary system, as you can well understand. Me, in general, I'm in favor of not destabilizing the monetary system.
Yes.
It's already been destabilized enough. I come from Greece, so we know what it means to have the banks shutting down. We also know what it means that a whisper of a bank having a problem leads to huge excess, people taking out their deposits, and if they have a monetary wallet and the limit is high. And that's why my position is it shouldn't come to the parliament, because I can see a fight over the limits that'll become political, 10,000, 12,000, 100. I would prefer that it doesn't actually, this is funny to take away that choice, not because it's a technical issue, and let the ECB decide how that should be worked out. The wholesale, I think it'll just naturally go to that. These are some private sector solutions, and the worry, of course, is the cost of the whole project, and will it be able to be competitive, because the retailers will say, I'd like to have an alternative to non-European payment systems. And there's people who are against the digital euro on instinct, and because being in politics, I have to be able to explain, this is my grandmother theory, I have to be able to explain to the village woman why even worry about a digital euro, and it's a sovereignty issue. So I would say we have a new government in power in the United States, and let's pretend, I like to take extremes to make it very simple, let's pretend Denmark does not give Greenland to the United States, which I don't think it will. And then Trump calls up our nice credit card companies, as they did in Russia, so it's not extreme, shut them down for a few days in Denmark. That's how I would explain it. Don't we want our own digital euro? I need to make extreme examples because these are very technical issues, because my role is then to go on Greek television and even explain why I want the digital euro. This is a more political argument. Not that they would ever shut down American Express in Denmark, but we've seen these new threats coming on board. So I have to be able to make those arguments. So my general principle is the technical, let's say ECB, and the experts over here, including Amazon, of course. And if you find a way to make it relatively inexpensive, then we're all on board. That's the technical. So the political is my role, and you have the fun stuff of working out the computer network.
But maybe I pass on the more holistic question also to you, Elie. I mean, do you find the discussion about other use cases a distraction from the implementation of the digital euro? Should we really focus on retail first, as Nikos said, or do you see potential to go further?
You know, I had earlier a discussion with the Bank of England, who are looking at the digital pound, and it's very interesting, you know, to see the approach that is quite different, I would say, from how the ECB is going there. But I'm mentioning this because, well, their approach is mainly focused on retail, while I think the ECB wants to do, you know, a bit more over this. I think what is important is to start with what is the easiest to achieve. I think this could be a good strategy. While there would be a political debate, because I think it's a political project first and foremost. Like, we are here on this side maybe focusing more on the application and like on the technicalities. But I think there are a lot of political questions that haven't been solved yet. And, you know, the parliament and the rapporteur and the shadows are going, you know, to advance this. But I would say, let's focus on what could be achieved first. And it seems like maybe the retail is the most difficult one in the EU. So maybe we could start with other use cases that are maybe more obvious, because other than, you know, the point that you mentioned, Nikos, and I think it makes sense, but then there are alternatives now with the instant payments, with other solutions that are there. Like, we have alternatives. So in case something like what the scenario that you described could happen, we have already solutions that, you know, could bring, you know, the European citizens to make payments without relying on some international players.
I think it falls to me to thank the three of you for a very interesting discussion and reaction to Burkhard. It's good to see the digital euro as part of the digital agenda, and it's part of the competitiveness agenda as well, if done well. Thank you very much to the three of you for being with us. And good luck, Nikos, with the negotiations. Thank you.